If you are watching this right now, chances are you are tired, mentally exhausted, glued to your screen all day, chasing 5-minute candles, feeling the pressure of every tick, every red candle hitting your emotions like a punch. Day trading looks exciting on social media, but behind the scenes it is stressful, time-consuming, and emotionally draining. And today we are finally revealing the real path that many profitable traders eventually take, transitioning from day trading to swing trading. This is not about giving up. This is about leveling up. And if you do this the right way, it can completely change how you trade and how you live your life. Let's start with the honest truth. Day trading teaches you discipline, execution speed, and risk control, but it also traps you in front of the screen. You wake up early, you watch pre-market, you wait for the open, you trade the first hour, then the lunch chop, then power hour, and by the end of the day you are exhausted. Even if you make money, you feel drained, and if you lose, it hits even harder. Swing trading on the other hand is about patience, planning, and letting the market do the heavy lifting for you. Instead of reacting to every small move, you position yourself for bigger moves over days or weeks. The biggest mindset shift when moving from day trading to swing trading is understanding that you do not need to trade every day to make money. Day traders are conditioned to believe that no trade is a wasted day. Swing traders know that waiting is a position, and often the most profitable decision is doing nothing. This shift alone can feel uncomfortable at first, because you are used to action, adrenaline, and constant decision-making. But once you experience the clarity that comes with fewer, higher quality trades, you will never want to go back. Now let's talk about why so many traders make this transition. The first reason is time freedom. Swing trading does not require you to sit in front of the screen all day. You can analyze charts after market close, set alerts, place orders, and go live your life. Whether you have a job, a business, or family responsibilities, swing trading fits into your schedule instead of controlling it. The second reason is emotional stability. Fewer trades mean fewer emotional swings. You are not reacting to noise. You are focusing on trends, structure, and higher probability setups. And the third reason is scalability. It is much easier to scale a swing trading strategy with larger capital compared to rapid-fire day trades. But here is the mistake most traders make. They try to swing trade using a day trading mindset, and that is a recipe for disaster. Swing trading is not just holding trades longer. It requires a completely different approach to analysis, risk management, and expectations. If you keep taking tiny targets with tight stops like a day trader, you will get shaken out constantly. Swing trading requires wider stops, smaller position sizes, and the patience to let trades breathe. The first practical step in transitioning is changing your chart timeframes. If you are used to the 1-minute or 5-minute chart, you need to step back, start focusing on the daily chart. This is where swing trades are born. The daily chart shows you the true trend, key support and resistance levels, and major breakouts or breakdowns. Once you identify a setup on the daily chart, you can use the 4-hour or 1-hour chart to fine-tune entries, but the daily chart should always be your anchor. Next comes strategy simplification. Day traders often use multiple indicators, fast-moving averages, momentum oscillators, volume spikes, and tape reading. Swing trading works best with simplicity, clean price action, trend lines, support and resistance, moving averages. Like the 20-day, 50-day, or 200-day, and basic indicators like RSI for confirmation, the goal is not to predict every move. The goal is to catch the middle of a strong move and ignore the noise. Risk management also changes dramatically. As a day trader you might risk 1% per trade with a tight stop. As a swing trader you still risk 1% or less, but your stop loss is wider, which means your position size must be smaller. This is where many traders struggle psychologically, because they see fewer shares and feel like they are not making enough money. But this is a trap. Swing trading is about percentage returns, not share count. A well-executed swing trade can deliver 5%, 10%, or even more on a single position, which is equivalent to dozens of small day trades. Another critical adjustment is expectations. Day traders are used to instant feedback. You enter a trade and within minutes you know if you were right or wrong. Swing trading does not work like that. Sometimes a trade will move against you for a day or two before turning in your favor. Sometimes it will go sideways and test your patience. You must learn to trust your analysis and your plan. As long as the structure remains valid, you stay in the trade. Emotional discipline becomes even more important than technical skill. Let's talk about trade selection. Not every stock is suitable for swing trading. You want stocks with strong trends, clear patterns, and good liquidity. Avoid choppy, range-bound names that move randomly. Focus on stocks making higher highs and higher lows in uptrends, or lower highs and lower lows in downtrends. Earnings catalysts, sector strength, and overall market direction also play a huge role. Swing traders think in terms of alignment. When the stock, sector, and market are all moving in the same direction, the probability increases dramatically. One of the biggest advantages swing traders have is the ability to plan trades in advance. Instead of reacting in real time, you can build a watch list, mark key levels, define your entry, stop loss, and target before the market opens. This removes a lot of emotional decision making. When price reaches your level, you execute. If it does not, you do nothing. This level of clarity is something day traders rarely experience. Now let's address the fear everyone has: overnight risk. Holding positions overnight can feel scary at first, especially if you are used to closing everything by the end of the day. Yes, gaps can happen, but this risk can be managed. Avoid holding through earnings unless it is part of your strategy. Diversify across multiple trades instead of going all in on one position, and always size your trades assuming the worst-case scenario. When you do this correctly, overnight risk becomes just another variable, not something to fear. The transition phase is crucial. Do not switch everything overnight. The smartest way is to go hybrid for a while. Reduce your day trading activity and start taking small swing trades alongside it. This allows you to adapt psychologically without shocking your system. Journal every swing trade. Note how you felt holding overnight, how price behaved, and how your plan performed. Over time your confidence will grow, and you will naturally gravitate more towards swing trading. Another powerful benefit of swing trading is reduced overtrading. Day trading tempts you to take marginal setups out of boredom or frustration. Swing trading forces you to be selective, because setups take time to develop. This selectivity improves your win rate and your overall performance. Fewer trades, better results. Let's also talk about lifestyle. Many traders underestimate how much trading style affects mental health. Staring at screens all day, constant decision making, and rapid losses and wins take a toll. Swing trading gives you mental space. You check the market once or twice a day. You think more clearly, you sleep better, and you approach trading as a business, not a casino. This alone is worth the transition for many traders. Common mistakes to avoid during this transition include moving stops too early, checking charts obsessively, abandoning the plan because of short-term noise, and expecting day trading speed profits from swing trades. Patience is the skill you must train, and patience is what pays the most in swing trading. Here is the reality check. Swing trading is not easier than day trading. It is different. The challenge shifts from speed and execution to patience and discipline. But for most traders, this challenge is far more sustainable in the long run, especially if your goal is consistent profitability and a balanced life. If you are currently struggling with day trading, feeling burnt out, or not seeing consistent results, transitioning to swing trading might be the smartest decision you make. It does not mean you failed as a day trader. It means you evolved. Many professional traders started as day traders and eventually moved to swing trading or even position trading as their understanding deepened. The market will always be there. Opportunities will always come. You do not need to catch every move. You only need to catch the right ones. And swing trading allows you to do exactly that, with less stress, more clarity, and more control over your time. If you want to grow as a trader, start thinking bigger. Stop reacting. Start planning. Let the market work for you instead of against you. Transitioning from day trading to swing trading is not just a strategy change, it is a mindset shift, and once you make it, trading will never feel the same again.